9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We are counting down to the open of markets in Greater China. Let's get to your top stories today. Stocks under pressure as oil rises on concerns really about scant progress, if any, in terms of de-escalating the Iran war. President Trump ordering the Navy to fire on boats laying mines in the Strait of Hormuz.
The conflict keeping Asian policymakers on alert. Japanese Finance Minister Satsuki Katayama tells us exclusively that she's cautiously watching the economic fallout.
Speaking of on alert, we'll also speak exclusively to the Philippine Central Bank Governor Eli Remolona as the war's fallout prompts a rate hike and signals of more to come.
And we are live in Beijing, where the world's largest auto industry gathering is underway, even as the sector grapples with overcapacity and an intense price war. Well, we're not seeing too much progress when it comes to the Iran situation here, but we're still seeing oil above $100. Not doing too much in terms of wobbling this equity rally we've seen, but really it's the earnings that's been supporting a lot of this, particularly from the tech side. Last night it was Intel.
Yeah.
But we got to talk more about AI, what Tencent is doing here as well. And yeah, I mean, even you're starting to see central banks here in Asia are preemptively trying to tame the rise in inflation prices and expectations here. So we certainly saw BSP leading the charge of, after what Singapore did, Philippines hiking yesterday.
They're becoming more proactive.
Yes.
In fact, what was interesting about that, we could call it a surprise move because it was a split decision, a split across economists going into that decision. And then there was also the possibility, and the governor brought this up, and I think he's going to join us in a couple of minutes. He talked about how actually a bigger rate hike was actually on a table, right? So I think just being proactive and just trying to get ahead of second-order effects will be something we'll touch on as well. The entire Iran situation is starting to disappear across markets, with the exception of oil. But it's also starting to show up in the fundamentals, and I think we'll have the central bank governor in a moment to help us understand that, and also the FX angle, to what extent 60 is something of an unofficial threshold market should be looking at, or does it become 61, given that we're trading above that at the current moment. Now, there's also this big corporate earnings, corporate China component to this, right? There's earnings, there's Tencent, and of course this big auto show that's taking place in the capital. Yeah,
the auto show will be quite interesting to see. Obviously EVs dominate in China when it comes to these things. So, does the Iran war only just ramp up this EV adoption, and at a time when things are pretty much slowing down domestically in China? And really, we'll see what the export picture looks like, given that, if this war prolongs, certainly the external picture and the demand picture might change quite dramatically as well. So certainly there's a lot to watch from the Beijing Auto Show, everything from EVs, we're talking about supercars from Xiaomi. I mean, there's certainly lots of good things that are going on there too.
Yeah, the concept cars priced at half the supercar, which is going to be interesting. I think horsepower of 700. Oof. That used to be well above $1.50, but now perhaps you could get that for less than $1.50. That's an exaggeration there, of course. So we'll bring you that in a moment here. But a brief look at markets, and because this is very interesting, right? So we talked about this. When you look at risk appetite, we're back, but oil is still up, which is going to be an interesting dynamic to see. Aussie yen's on the way up. On top of all of that, I think the chip story, you mentioned Intel, right? So I think Taiwan is coming online. So it's April 24th, and this entire month, the Philly Semiconductor Index has yet to close lower, not even once.
17 days,
17 days, which is crazy.
That's a record.
Yeah.
Certainly you continue to see the chip side of things doing quite well. We'll see how this all fares here this morning. But you are still seeing when it comes to the North Asia side of things, Japan still looking pretty strong here today. Futures are pretty flat in China. We're talking about, not much move in the currency as well, 683. So, it gives us time to really talk about really other things, right? Whether it's earnings or just shiny cars. The annual Beijing Auto Show gets underway today, and touted as the world's largest mobility showcase, this year's event features over 1,400 vehicles and a focus on the shift towards AI. Let's bring in our man on the ground, our chief North Asia correspondent, Stephen Engel. He is at the Beijing Auto Show and joins us now. Steve, how are things looking today?
crowded and packed. It's about 50% larger than the last time the auto show was held in Beijing, when they were coming out of the pandemic and really kind of unveiled their new high-tech EV push, which of course has only gone from strength to strength over the last couple of years. We're at the Hyundai booth right now because the CEO, Jose Munoz, will be joining us in about a half hour's time for a great conversation about how the Chinese market has shifted, obviously, to be dominated by the local players. And where does that leave the foreign players? Because the Volkswagens and the GMs and the Ford and the German other German automakers, including the Korean players as well, have been having a hard time adjusting to this new dynamic and the domestic price war. So how do you remain competitive in the world's biggest auto market, in the two world's biggest auto markets, the United States and in China, amid a devastating price war, of course. Now, Jose Munoz told us recently that globalization is over. That's a very strong statement. And he says that's why their strategy now with their new line of Ioniq V cars here is in China, for China, and they're going to be partnering more here and developing cars. Come on over here and see some of these concepts. These are not ready for market yet, but here is the Ioniq Venus. I guess they have galactic aspirations for the market. And over here is more down to earth, so to speak. This one is the Ioniq Earth. Looks sort of like a moon rover, no doubt. But again, they are coming here with a full-throated approach of being in China, for China. We're going to be talking to Jose Munoz at length about that.
Steve, fantastic.
Galactic.
Stephen Engel.
Yeah.
Certainly one for Mars. Get us there quite quick. Stephen Engel will have lots more on the ground there at the Beijing Auto Show. The other big story we're tracking, of course, is, and I think Steve alluded to this as well, right? The shift towards sustainable energy sources, given what's taking place in Iran. It's prompted central banks. We talked about Singapore last week. You had the Philippines just yesterday raising interest rates, signaling that perhaps more is to come. They also raised their inflation forecasts for the year, with the Iran war likely to spur more price pressures to the upside as we try and figure out how we look through this. Eli Remolona is with us right now. He's the Philippine Central Bank Governor, joining us exclusively from Manila. Governor Eli, magandang umaga po. Good morning. So we understand this was close, not close in a sense that it was a hold or a hike. I understand you considered even a bigger hike. How close was the central bank to moving by 50?
That part was close. What wasn't close was the decision of whether not to hike or to hike. But how much the hike would be, that was a close vote.
You have signaled further rate hikes, Governor, at a time when the growth picture is looking a bit softer. I mean, how many rate hikes do you think the BSP has room to do, and can the economy absorb them?
Well, we stay vigilant, and we'll do as many hikes as necessary. But I think, David, you used the right words. We're being proactive. We're trying to stay ahead of the curve.
Okay, so we understand that. Can I just ask you too, because a lot of this comes down to inflation, and I understand you guys have raised your inflation forecast again. It was quite a big jump in inflation in March. Can I ask you, Governor, how is inflation tracking this month?
Well, it was a big jump for this month, but it's largely because of the oil price shock. The spillover effects are still modest. And it's the spillover effects that matter to us. We can't do very much about the shock itself. Normally, if it's a small shock, David, we would just look through it. But this one was more than modest.
What does that tell us about the pace of these hikes that you say you're ready to deliver? Can we expect successive rate hikes? Or do you think, Governor, that it's going to be more spread out?
Normally, Yvonne, it would be a succession of small rate hikes, but it will depend on how big the spillover effects are. So we have to just watch the data and measure expectations.
Have inflation expectations, in your view, Governor, become unanchored at this point?
The expectations have risen, but so far they haven't become unanchored. So far, so good. But they have risen to reflect the rise in inflation.
Just to also get a sense of urgency on the part of the central bank, and you've been quite clear in your that you want to be proactive here, and even if that means a lot more rate hikes than the current one that you just announced yesterday. I want to get a sense of, well, two-part question is,
yes.
Should the market understand the openness of the central bank to hike again at the next meeting, or is the sense of urgency such that you would even consider an off-cycle hike if that is the case that needs to be?
I think the market needs to understand that we will do what's necessary to contain inflation, and at the moment that seems like a succession of modest rate hikes. I would say we expect the yield curve to steepen, so both the rise in the short rate and the steeper yield curve should help to contain inflation.
The BSB is still expecting growth to be about 4.6% this year, Governor. I'm just wondering, does that factor in the prospect of more monetary tightening, or do you think that eventually the growth impact could in some ways be bigger and you're going to have to adjust your forecasts?
We're hoping the growth would be higher. Our potential is much higher than our forecast. Yes, we're saying about slightly stronger than last year, maybe 4.5, 4.6% this year, but as high as 6% next year.
Okay, let's hope that turns out to be correct and the current shock turns out to be transitory. Governor, the other component here is the FX markets, and currently we're trading above 60 on the exchange rate. There was a few weeks back that we traded above 60.
That's right.
Up until this point, the market has treated 60 as that, let's call it, unofficial threshold on the part of authorities. Do you think the market should still look at 60 as that threshold, or has that changed?
We don't assign special significance to this number 60. It's not a threshold for us. We basically allow the market to seek its own level. I think funnily enough, when we hiked yesterday, the peso actually weakened.
Okay, well, are you active in the markets today? Could you give us a sense of that? In other words, are you comfortable with the current levels?
We're not active yet. We may be active later in the day, but for now we're not in the market.
So how much peso weakness are you willing to tolerate? I mean, we've had some say 61 might be that level. I'm just wondering, is that a level that makes sense to you?
We don't look at the level, Yvonne. We look at by how much it moves. If it moves by 50 centavos in a day, that's a bit large for us. But we don't have a target for the level of the peso.
Okay, Governor, I also want to ask, let's talk about the fundamentals of the economy. And certainly it's a very domestic-driven economy. It's a very consumption-driven economy. A large part of the consumption is really, if you think about it, funded via overseas remittances. A big part of those remittances come from the Middle East. Have you noticed an impact on those inflows coming in? And have you also noticed an impact in terms of consumption? Because consumers are being forced to corner a big share of their pockets to pay for energy.
Our remittances, including those coming from the Middle East, have been surprisingly resilient. So we thought they might decline, but they actually haven't declined very much. And I think historically that's been the case. Very stable source of foreign exchange.
Okay, Governor, we want to get a sense there clearly parts of this economy are affected currently, likely will see that iteration even further in the coming weeks or months. Can we get a sense, though, of what parts of the economy you think remain unaffected by what's going on, and how closely are you looking at that part of the economy?
Well, clearly, the part of the economy that's affected are the parts that rely heavily on oil prices, rely heavily on fertilizer. So that's basically food, agriculture, but services not so much.
Governor, we have to leave it there, but thank you so much for the time. Eli Remolona there, Governor of the BSP, joining us to talk us through, of course, that decision to hike yesterday. Your end reference rate just crossing the terminal a few moments ago, 686.74. It is weaker than expected here, but yeah, we're still talking about 683 levels for dollar China here this morning. We also are counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show.
Right, welcome back. We're still continuing to track these moves in the currency markets. 160, just shy of that level. No, not actually shy. That's quite a big. But in any case, we're below that threshold. The market has deemed at one point, of course, the threshold of intervention. In fact, just on that note, right, Satsuki Katayama, the finance minister, says she's cautiously observing the economic fallout from this Iran war, and that the warnings that the worst case scenario could actually see the conflict then last for years. Our exclusive conversation at Bloomberg's New Voices event in Tokyo. Have a look.
At G7, G20, and IMF financial meeting and World Bank meeting, everybody was so concentrated on to how to minimize or mitigate the risk around Gulf and Iran. Mm-hmm. But there has been no concrete, even though there has been no concrete conclusion, but everybody tried their best to as shorten as possible the duration. And as for duration, Saudi Arabian finance minister clearly said, because he's a person who is in place, and he's very much known, and he has someone who has confidence in international finance world. He said that the best scenario, the most optimistic scenario is the end of June. As for Strait of Hormuz. And if the worst scenario.
What is the worst scenario?
1 year, 2 years, even 3 years. Because if it remains, the risk for them to be bombed or attacked by some part of Iran, even not the representative of Iran, but some part of Iran remains. And everybody has listened very carefully and taking a memo.
Which scenario are you preparing for?
Of course, we finance minister must be almost ready for good and bad.
That's a very true answer.
Yes.
Is the bad coming mostly from the inflationary pressures, or is it also about demand destruction because of growth? Which one worries you the most?
Yeah, for that, IMF did a very good explanation, even OECD or every central bankers, because the difference between optimistic scenario and bad scenario is too different.
Yeah.
So many difference. So we cannot clearly change their financial position or financial policy. We are in a position to take a look and hold and very cautiously observing the situation. That's the opinion of the most of the finance ministers and central bank.
And that was the Japanese Finance Minister Satsuki Katayama speaking exclusively to us and Sherry at the Bloomberg New Voices event in Tokyo. In other news this morning, we're tracking tensions between the U.S. and Iran are rising as both sides maintain blockades in the Strait of Hormuz. President Trump has ordered the Navy to fire at any vessel placing mines in the strait, with the U.S. military saying it has intercepted 2 oil tankers seeking access to Iran's ports. The blockades remain in place with no sign of progress towards new peace talks.
How long are you willing to wait until you get a
Well,
unified response?
Don't rush me, Jeff. Guys like you want to say, oh, so we were in Vietnam like for 18 years. We were in Iraq for many, many years. We're in for I don't like to say World War II because that was a biggie, but we were 4.5, almost 5 years in World War II. We were in the Korean War for 7 years. I've been doing this for 6 weeks.
President Trump says Israel and Lebanon will extend their ceasefire by 3 weeks, creating space to work on a long-term deal. Posting on Truth Social, Trump says he'll host the leaders of both countries soon. There was no immediate response from Hezbollah, which was not involved in the original ceasefire, but had largely abided by its terms.
Still ahead, we're back at the Beijing Auto Show with Hyundai CEO Jose Munoz to really find out how South Korea's largest car maker is dealing with the pressure from U.S. tariffs and also, of course, what's taking place in the Middle East. Just about, what are we now? 6 minutes and 20 or so odd seconds away from the opening bell. Tencent leading declines right now. We're down 0.7% on the benchmark. Lots more ahead. This is Bloomberg.
Watching Tencent shares here today. So they announced this major upgrade to its foundational model. So they're calling it High 3, which is a reference to their main Hunyuan platform. The shares are lower by about 1.5%, but analysts in the street are basically saying it looks like this new AI model is prioritizing speed and price, not so much really than a large parameter model, but certainly the stock is slightly lower here today, Dave.
I mean, speed and price, when you look at the stock, you can talk about that too. The speed at which we got to almost 12-month lows on this and a price at 481 is the level to watch. We're lower modestly across the benchmarks today. It's worth pointing out, I think turnover yesterday onshore was 2.7 trillion, highs in about 7 or so weeks or so. We are also entering that part of the calendar year where southbound flows are not as robust as usual. Might weigh on the index. CGB markets coming up, yields on the way down. We have auctions to tell you about. That happens today. The open is ahead. This is Bloomberg. Good morning. Welcome back. So we made it. It's Friday. We're going into the weekend with, I think, a lack of momentum either side, really, when you look at equity markets. So this is on a global basis. I think we're still down modestly for the week. The tech continues to outperform. We're also going to get first reaction to Philippine cash markets at the rate hike yesterday. Apart from that, earnings, corporate China, you have Tencent news there, and of course the Beijing Auto Show, all front and center today. Yeah, so everything from tech to EVs to AI, certainly you're still seeing that tech flare across these markets here, despite the fact that oil remains above $100. But yeah, no news, I guess, still when it comes to the Iran war situation. So time to focus on earnings, time to focus on, of course, other things that are moving these markets, right? So when you take a look when it comes to mainland markets here on this Friday, it looks like we are still seeing some losses here right now. The CSI 300, we're lower by about 1/3 of 1%. Shenzhen as well. Watching the Chinex very closely here because basically this benchmark has nearly doubled in the past year. And lately, the preference has been Chinex versus HS Tech, right? There's more enthusiasm for the AI hardware sort of things. You just had this great report coming through about optical stocks. And really, we had the likes of some that came up with some pretty upbeat sort of outlooks there. So that should be sending some of these optical stocks higher here today. And they are part of some of these seven sisters as well on the Chinex. But today, we are seeing Shenzhen fall some 0.6%. We're coming off that. Shanghai crude is still a bit elevated. CATL, though, still stands out and might still be that pillar of support for Shenzhen here. We're up another 0.5% for the A shares. But, as we say, not much conviction. And even Capricorn Tech, despite that Intel, the sales forecast, which led to the stock rise of 20% after hours, we're not quite seeing that in some of these China chip plays here today. Let's hit the boards and see how Hong Kong is doing. We might see a bit more, I guess, pain in this
this market, and HS Tech seems to be the one that is dragging things lower. We're seeing the Hang Seng down about 0.7%. Tencent, we talked about this new model that they've announced here, high 3. Right now, the market doesn't look too pleased by it, but we're seeing just losses just about 0.9% here today. But most of the mega cap sort of tech in China is lower today. Alibaba, Baidu are more than 1% to the downside, though. You're seeing a bit more red here today. Offshore renminbi still holding around that 683 level here this morning. And but CGBs continue to look strong, Dave.
Yeah, we have a 1-year, I think it's a 20-year and a 30-year bond sale coming through today. So it's going to be busy as far as the auctions are concerned here. And it's coming against the backdrop of really some strong momentum coming through in the CGB space. And as you can see, yes, we now have a 1.73 handle on the 10-year yield. Flip the page, please. Also coming online, cash markets in the Philippines. You have 2 banks coming up on your screens. That's their price rate hike, and then likely some more coming through out of the central bank there as they flagged. They want to be proactive. They want to be forceful. They want to make sure this inflation story does not go unanchored. Markets are taking this one well in stride, and we are up slightly in cash markets there in Manila.
All right, let's get you back to the Beijing Auto Show now, where our chief North Asia correspondent, Stephen Ingle, is standing by with our next guest. Hey, Steve.
And our next guest, you can probably guess since we're at the Hyundai booth here at the Beijing Auto Show, is the CEO of Hyundai Motor, Jose Munoz. Thanks so much for having us here.
Thank you for having me here, Steve. Always a pleasure.
Always good to talk to you. So it's kind of a loaded question when I ask, how important is China at a time there are so many global headwinds with the war in Iran and the bifurcation, if you will, of supply chains? You tell me you're tripling down on this market. Why?
Exactly. Well, China used to be one of the most important markets for Hyundai Motor Company back in the days, right? So we've been in this country since 2002, and about 6 to 7 years ago, this market was representing 17% of our global sales, and then it came down to about 4%. So what we have included as part of the tripling down in China is to get to about 9% of our global sales target. This means about 500,000 sales in China by the end of 2030.
So how important is it, given the softness you've seen in the United States, given the supply chain shocks that we have? You're redirecting ships around Africa to avoid the Persian Gulf, obviously. And China is dominated by the local players, tech-laden cars, where most foreign car makers have seen market share completely dwindle.
Exactly. So the point of China is not only the market of China itself, which is also been dropping over the last few months, about 22%. So it's been tough here. But the most important of China is that this is the most advanced market in the world in terms of not only EVs, but also autonomous driving and then software-defined vehicles technology. You want to be really competitive in the markets where Chinese competitors are operating. You have to be competitive here. So we are launching for the first time in China our BEV exclusive brand Ioniq, which was not launched in this market. And we have announced the launch of 20 new products from now through to 2030 to try to become more relevant in this market, starting with the Ioniq Venus and the Ioniq Earth, which is the one
two concept cars
you can see here. So they are coming right now. So these two cars will be launched this year.
How important is it to keep costs down right now? Because you saw operating profit down 31% year over year. There's softness in the United States. There's some stresses there, obviously, that we can talk about in a minute. But here in China, I think you're focusing on in China for China, and that's the local partners. How did they help you not only tap into their advanced tech, but bring costs down, like with BAIC, your partner across the way, and also Momenta, which is in these cars for autonomous driving, right?
You got it absolutely right. So first and foremost, I would say, indeed, we had operating profit going down, but the drop has been much less than it was in the fourth quarter of last year. And in fact, our revenues have achieved all-time record globally, so which is a very good sign of the fundamentals being good. We have achieved an all-time record also in North America. We have increased share there, more than 0.3 points of share. In India, we have had an all-time record as well. However, costs it is one of the key elements that we need to master. And the way we want to do it, particularly in China, is by localizing. We are partnering with local operators, local brands, local tech companies like Baidu, like ByteDance, like Momenta, which is the leading company in terms of autonomous driving. So not only we need very good technology, but we need to achieve this at an affordable cost. And then hopefully we can also apply some of these technologies and learnings through the rest of the region, so that we can close completely the gap that is being created in last quarter and this quarter by the tariffs, by war, by a number of elements which we cannot control.
You mentioned Momenta. There's been a lot of talk about maybe you would be buying that. How far along are we in possible negotiations to purchase the Chinese autonomous driving company? We
have become a shareholder. We are not the only one. There are other OEMs who are shareholders. We have an excellent relationship. So the Ioniq Venus is going to be launched with a state-of-the-art ADAS, so with the level 2 plus from Momenta, which is well appreciated by the Chinese consumers. So I think that's something very good. Also, we are having a partnership in this market with CATL for
the batteries.
For batteries to be able to achieve more than 600 kilometers on the homologated system here in China, which is also a very good one, not to mention a 27 inches screen and the latest and greatest on software.
Are you still interested, though, in buying Momenta?
We are not talking about buying Momenta. We are shareholders of Momenta and utilizing their technology. We'll have some more meetings going on.
How about other partnerships? There was Korean media reports about possible partnering with XPeng as well in using some of their advanced driving technologies and robotaxis.
Like all companies, we have a lot of explorations to see how we can really take advantage. For the time being, the official partnerships that we have announced, so the partnership with General Motors, we have a partnership with Waymo, so we're going to launch this year by Q4 the robotaxis integrated fully in our HMGMA factory in Savannah, Georgia, and then more to follow. We have also a partnership that we have announced with Amazon, and then we are always exploring. So I'm sure that some more things will happen in the next few months.
I told you it was going to be rapid fire questions. Let's move on to Boston Dynamics. The Atlas humanoid robotics, obviously that's a big push here. All the players, including XPeng I mentioned, going big into their iron humanoid robots. Full scale rollout, I think for you guys, for Boston Dynamics, will be 2028. Can you give us an update?
Yes, so this is really a key integral part of our strategy, because this is not about showing off what the robot can do, etc. This is about having a real physical AI and utilize the robots for a purpose, right? So we are designing robots that have capabilities beyond humans, which are helping humans, which are not substituting humans, and are doing jobs that the humans cannot do. Right, so the purpose is to increase productivity, is to increase quality and reduce cost. We are working to help, especially on the manufacturing area. We believe that our control company, Boston Dynamics, is the best in the world in the technology. We are one of the best, if not the best, in the world of manufacturing. We want to ensure that we are able to produce robots in a mass produced basis, and we have announced the intention to produce about 30,000 before the end of 2030.
A lot of market chatter about when an IPO for that would happen. Do you have any update for us?
We're not going to speculate. What I can tell you is that the combination of solid fundamentals of our company performance, plus the presentation at CES of our real intention with Boston Dynamics through the humanoid Atlas, has made our stock to grow by 120% on just a few months. This shows that we have really very strong foundations to continue to grow in the future.
You've also said that you're accelerating your what usually is a monthly meeting for supply chain updates now to weekly, even more often than that because of what's happening in the Middle East. Can you update us right now on how the ships are still being diverted around Africa and the impact as the war goes on into 2 months?
Yeah, obviously we are impacted like all of our competitors at different levels. For us, the Middle East is a very important region. It's one of the highest margin regions. And then we had to deviate some of the production that we had for that region for other regions, which is good. For example, North America or Latin America or even Korean domestic market. But also logistically, as you can imagine, a lot of ships going through the Strait of Hormuz, coming from Korea, going to Europe and other destinations. We have decided to localize to be able to source directly in Europe or deviate them through the Cape of Good Hope, which is a very, very long route. So that's an indication that our fundamentals are even stronger because despite all that, achieving an all-time record revenue in Q1, I think it's been something we're very proud of.
But localization has its own challenges as well. You said globalization is over. You stick by that?
I stick by that. I think when we see what is happening in the world, you need to be localized, which is our big commitment in the North American market, as you know, to bring to the market the capacity, the technology, the jobs. Despite having 570,000 jobs already created in the market, we're bringing 25,000 more with $26 billion of investment. So, and this is because we believe this is the most important market for us today and in the future, and we want to be independent on other factors. Same is happening in other regions like China.
But you want to build more in the United States. I think you're building about what you sell in the United States, 50% is made in the United States.
Today, and we want to take that to 80%, so which is a big undertaking.
So how do you grow but also maybe contain the cost so you can improve that bottom line as well? You're under the threat of the tariffs, obviously. They did come down on South Korea from 25 to 15, but still probably not enough of a respite.
Several $1 billion of impact. This is a big one. That's why you have to localize with intelligence. You have to localize by also trying to be very efficient, takes the economies of scale of the group and the partnerships with other companies, try to have the best partners on our supply chain, starting by our own affiliated company, Mobis, and many other partners, right? So also Globis utilizes our partner for logistics. So the combination of all these capabilities, including the production of green steel in Louisiana, which we are developing, is what needs to bring the cost down, but with a higher quality, with higher productivity. It's not only about the cost, it's doing more with less.
Jose Munoz, we have people to meet. You have people to meet. Congratulations on your big presentation here and the Ionic Venus and the Earth, I think.
Exactly.
And the launch of the Ionic V here in the China market.
Exactly.
Jose Munoz, Hyundai Motor CEO, with us here at the Beijing Auto Show. Back to you.
Yeah, great conversation and a trip around space, it seems, too. Steve, of course, our thanks to Jose Munoz there. And there's much more coming up from the Beijing Auto Show. Stay with us for interviews with executives from FAW, Series, and Volkswagen China. That's in the next hour of the China Show.
Right, so just very quickly, just to mark what's happening in Taiwan. So this is really moving against the grain. There's the Intel story. There's an upgrade, too, coming through out of JP Morgan, upgrading Taiwan, again, on this old story, continuing story. On AI, and as you can see, it's playing out across this market quite nicely. The opposite is happening here in Hong Kong. We'll tell you about that on the other side of this break. Right, it's about 60 minutes into the cash market session, and as you can see, we're down across greater Chinese benchmarks. Hang Seng Tech is underperforming. Quite apparently today. Volumes are on the lighter side of things, but yeah, I mean, we're down a fourth day now on the tech gauge here in Hong Kong.
Yeah, and it's really the likes of hardware versus software, right? And this is where HS Tech is continuing to look a bit more vulnerable to that trade in favor of Chinex, of course. But yeah, we're going to talk about this interesting story that's developed with the PwC. The accounting firm has agreed to pay $166 million in fines and compensation to settle investigations into its auditing work for the collapsed property giant Evergrande.
Yep, Min Lo, our China correspondent, is here with us to walk us through really the penalties, some of the money that is being earmarked to pay for compensation. So what do we know about this?
Yeah, so the Hong Kong regulators have fined the company now by 300 million Hong Kong dollars. And in addition, they have fined two of its former partners 5 million Hong Kong dollars each. And it's also imposed this 6-month suspension, meaning the company will not be able to take on new clients for the next 6 months. And then separately, it has another agreement with the SFC to pay about 1 billion Hong Kong dollars into a fund that will be then used to compensate eligible minority shareholders of Evergrande. So this is, of course, a multi-year conclusion to that probe after, Evergrande had been accused of significantly inflating its revenue by more than 500 billion yuan. And the Hong Kong regulator has accused PwC of ignoring multiple red flags and really failing to basically be an independent auditor in this case and ignoring evidence of Evergrande prematurely booking these revenue for properties that were not yet completed and delivered to customers.
Has PwC responded, and is this fine going to be a big hit on their operations?
Well, PwC has said that it's not going to have any impact on existing clients. But of course, the suspension is going to hurt it. And already it is suffering from this reputational damage, right? Because since the probe began, it already has seen all these exodus of staff and partners as well as clients, particularly mainland state-owned enterprises that have been switching to other auditors, including the Hong Kong regulator, the SFC as well, used to be a client. They have switched to Deloitte now. And this is not the end of the story for PwC, because there is a separate group of liquidators who had filed a lawsuit, and that's only going to reach the first public hearing in May, and they are trying to claw back more money for creditors as well. So depending on how that goes, maybe PwC could be facing more financial liability.
All right, Min, thank you. Min Lo there, our China correspondent. Let's get to some corporate news this morning. Tencent has revealed a major upgrade to its foundational AI model. The company calls Hai 3 its most powerful AI model yet, claiming advances in areas from complex reasoning to coding. The model also supports OpenClaw, and it marks a high-stakes test for China's most valuable company in a frenetic AI race since it recruited a top researcher from OpenAI. Intel shares gained 20% in after hours on a strong revenue outlook of up to $14.8 billion for the current year. It signals that the company is benefiting or beginning to benefit from the build-out of artificial intelligence infrastructure. The outlook also suggests that the CEO, Lip Butan, is making progress on a challenging comeback plan.
All right, over in Japan, Daiichi Sankyo down, and quite a bit here. Well, it's delayed earnings, and I think that's what you get in as far as market reaction goes. More on that, plus more stories coming up here on The China Show. This is Bloomberg.
Well, we're taking a look when it comes to Meta and Microsoft. They're planning job cuts and buyouts that could affect as many as 23,000 staff as they seek to streamline operations and offset heavy spending on AI. An internal Meta memo reveals plans to cut 10% of workers, or roughly 8,000 employees, with 6,000 open roles going unfilled. Microsoft, meanwhile, issued its own memo offering voluntary buyouts that a source says could apply to about 7% of its U.S. workforce. Warner Brothers Discovery shareholders have voted to approve a $110 billion takeover by Paramount, beating out a rival bid from Netflix. The deal offers shareholders $31 per share, but still faces antitrust review in the U.S. and the EU. If blocked, Paramount would owe a $7 billion termination fee. Paramount shares traded lower in New York, with most of the dip coming before that vote.
Okay. All right, let's have a look at markets right now. Optical stocks coming up on your screens. There's lots to get through, in fact, here in as far as this is concerned. Okay, so you have a profit surge. Shares are going the opposite way. This is a stock, of course, that has done tremendously well. So I think just putting that into context. Some semis to tell you about here within the Chinese market as well. Let's have a look at that amidst, I think if you just join us right now, the statistic earlier, the SOX index, Philly Semi Index, has yet to close lower this entire month. I think this is really going against the grain, certainly, of late SMIC. Hua Hong Semi are seeing some upside right now. Right, now, earnings are going to be in focus today, and I think it's the time of the year where you could confuse first quarter earnings with full year earnings because, they're coming one after the other. So you have Sands China, Ping An. Mao Tai actually came out a few days ago with full year. It's coming out today with Q1. So just keep that in mind as we look ahead to some of the big consumer names coming through with earnings. I think also, Macau casino revenue I think is also coming out today, if I'm not mistaken. I just got reminded there by the Sands China there.
Yeah, so there's plenty to talk about here beyond just the Iran situation, which still continues to be a bit of a standstill here. We talked about mainland turnover, which was quite strong yesterday. The Beijing Auto Show, where Steve is at, obviously we've spoken to Hyundai. We're speaking to some of these Chinese automakers coming up on what they're working on for this year. The Tencent new AI model is interesting. This is kind of a new test for them, and really they're playing catch up to the likes of ByteDance, the likes of Alibaba. But the stock did react a bit negatively here too. Of course, there's news. There is a CGB sale. And we talked about those earnings as well. So, it's just to wrap up everything in a bow for this Friday.
Yeah, quiet for once, isn't it? It's been quiet on the news flow so far. Just a quick correction on my part. I mentioned casino revenues coming out today. It's visitor arrivals and not casinos coming out today, and as far as Macau is concerned. All right, we have lots more on the way. Second hour of the China Show is coming up.
Welcome back to the China Show. Here's a look at the CSI 300 half hour into the session. It's really a down arrow story across the board when it comes to some of these Chinese assets here today. MSCI China is seeing declines about 1% or more. CSI 300 is also just around the 4,700 level. It really just goes to show when you talk about chips and the like. I think we're starting to see that the Hong Kong side of things is really on the other side of that trade, right? When you talk about the software side of things, where we are starting to see more declines in HS Tech here today. Overall, it's a quiet day, but not much going on.
No, that's right, and I think it's for once, right? For once, we're gliding into the weekend and the night is young, so we could be speaking too soon. But volumes on the lighter side. On the Hang Seng Tech story, it's really become quite obvious that the market is doubting the index as a really good AI player.
Yeah.
Right? You can find it elsewhere. Chinex, Kospi, Taiwan.
Yeah.
On the Hang Seng Tech, and I think you guys spoke with Sifu yesterday, right, out of Goldman, and I think she made that comment where the market is still doubting the components of the Hang Seng Tech as the best ways to play AI in China, and I think that's really showing up in as far as the market goes. Plus, within Hang Seng Tech, you also have this big car component, and there you have these price wars still.
You take a look at some of these discounts that BYD has done recently. So this is according to China auto market data compiled by Bloomberg, but the average price reduction for BYD cars actually accelerated to a record 10% last month. So that's a telling signal, according to analysts, that it's quite sobering that we haven't seen the end of this price war just yet. That's perhaps why you're seeing most of these BYDs down some 3%, and really it doesn't seem like no end in sight. It's interesting, too. We're at the Beijing Auto Show. I'm sure there's going to be a lot of conversations about that, Dave.
Yeah, cool cars and cheaper prices, I think, right? And, of course, you have Iran. But, of course, the longer term does look, of course, quite encouraging. And as far as this sort of shift towards energy is concerned and some of the capabilities, that you have there on the ground, a lot of cool concept cars. Just very briefly, the state across markets, you have Japan, which is headed into the latter part of the morning session. We're headed into the lunch break there. Taiwan, of course, is really an AI play, and of course within that is a TSMC coming up on your screens very, very shortly. And beyond that, oil, dollar, and Aussie yen are actually playing out, going the same. Where's Aussie yen? It disappeared. Can we get Aussie yen up? I think it's number 4. We hid it from you, but I can tell you that's on the way up. Anyway, we'll cross it back now to the Beijing Auto Show, our continued coverage of what's going on. Stephen Engel is standing by with his next guest. Steve.
Yeah, hey Dave, I need an eVTOL to get from hall to hall. That's the electric vertical and takeoff landing craft, because this is a massive place. It's 50% larger than 2 years ago, and we have to get from point to point to get to our next interview. And right here, Giles Taylor, FAW, Group Vice President of Global Design. Obviously, well, not obviously to the world, FAW is China's oldest car maker from the early 1950s. They make those Hongqi limousines made famous by those parades with Mao Zedong. you need to modernize to keep up, obviously, and you are modernizing to keep up with the trends, the tech-laden trends in today's EVs. How important is getting the right design in attracting the savvy buyers in China?
It's hugely important. I mean, I think last count there are about 105, 120 even car manufacturers in China. So to even compete, never mind stand out, you've got to put design first. Quality, all the things that we would sort of traditionally take for granted in the European sphere, China has it now. So design's come to the fore. So yeah, we've got to work very hard to make luxury stand out and then convenience stand out. We're working very hard to do that. How do you make it stand out on its own and not necessarily copycat? Because I think some of these cars, they sort of look like the Rolls Royces that you worked for Rolls Royce. I mean, some of them look like the Cullinan or the Phantom, which you were part of designing as well, the latest Phantom. So is that what the Chinese want in the Hongqi, or from FAW, sort of a China's version of the Rolls Royce, or something different? I think there's two sides to our brand. I mean, there's two sides to that industry in a way. I think legacy still has a major part to play. So some people say, you've got a real uphill task to keep legacy brands in place. Don't rely with the Gen Zs on your backstory. Actually, it's coming back. I think the legacy is a very vital part of the foundation, certainly for Hongqi. So we will use that. We've got a 70-year history going back to 1958. And we will put that up there. It'll be modern classic. We're not going to go retro. It's all about modernizing that story, bringing it to the people. And there is an appetite. In this sort of middle class area, they love the stories. They stand out with the nice watches that just sort of pop out because they have that, like a fine whiskey. You've got to have a backstory to make it authentic. So there's the other side of the industry, which is all about young tech. It is Gen Z. Yeah. And we've got to compete there as well. We've got to find out two sides to our brand. So in many ways, we have this sort of duality to the brand. It's quite difficult to manage, but if we don't have that, the one size suits all will not work. Is your remit to make it as affordable as possible as well? Because the price war has really brought the average selling price down. But there's also the other end of the argument, and that is now that the the anti-involution campaign has really kicked in to halt those price declines, people are now starting to look at the premium a little bit more as value for money. I think it's always a danger to strip out to get the margin. That's a spiral to the bottom. We know that, and brand equity has to be built very carefully. If you're going to sort of try and fight the war on price, be very careful. You could lose very quickly, especially in China. So we're putting in foundations. You've got to be maybe ready to live with a small margin for a few years, but to build that brand equity based on substance, based on content, and based on great design. So never mind maybe a spreadsheet that doesn't look good for the first year, look for the 5-year plan. That's what China's good at. It's building this up. And the race isn't won in 1 year. Maybe in the startups, because we're not a startup, but the startup sort of seems very, very different. You've got to come in, you've got to get that price advantage, market very carefully, and then you've got to get a foothold, you've got to hold on. Legacy is slightly different. We can't sort of come down and sell ourselves too short. Are you a little surprised as well about the time to market from design to showroom is much shorter in China than it is perhaps in your previous companies? You worked at Citroën, Jaguar, I mentioned Rolls-Royce. Yeah, it's shocking. Steve, I can say that to you, shocking. I mean, it's kind of like come here, live it, see it, and believe it. Because the manufacturing speed, and I'm going to include the word quality again, it's not just speed for speed's sake, it's actually bringing in new innovations. There's a car we've just launched today. It's not launched to market yet, but it's launched to the public, which is our Tiangong Concept Vision S. Okay, we're putting in place world innovative leading die-cast technology. So with Tesla, you talk about gigacastings front and rear, we're going to produce a car in the next 2.5 that's fully cast. There's no spot weld, there's no pressed steel. It's like a Lego kit. That's fast, that's innovative, and we can put a car from design on the road in about 1.5 years, which is half the time of most European van manufacturers. Who have you been told is your primary customer? Fleet sales, to the government, or whatever? Because the numbers, you're targeting 550,000 car sales this year, 460,000 last year, and up to 1 million by 2028. Does that require a lot of government sales, or really does it mean getting those people who are normally going to some of the higher end I think, if you go back to the core Hongqi brand, asked me that question maybe 3 or 4 years ago, we're looking for fleet, we're looking for government. It's a government-based brand.
Yes, it is.
That's where it came from. As we come into 2026, 2027, we're actually developing 2 new brands to try and get that spread, achieve that figure. So Tiangong, our new EV brand, will really power, with about 5 new different products to a younger market, that volume target. Modern classic Hongqi, yes, we're going to evolve that brand. That's our sort of legacy side of our story. And then Sunflower, which is this little icing on the cake of our brand portfolio, is very much part of that sort of beautiful, rich, luxurious side. So we've got 3 brands that are going to power those volumes forward.
And how much is AI used in design process? And how much does that save? And how much does that basically, how would I put it? Improve, obviously, what would be a normally drafting table kind of...
Yeah, fantastic question, because that's evolving literally month on month. I think if you go back literally to middle of last year, a lot of people in my industry would talk about how AI is affecting our creative industry. And people would say, yeah, so you're selling your soul, you can't just press a button and get those answers. Actually, right now you can. And it's about curation then. It's about having 50 solutions generated by AI, maybe in about 1 minute. And then it's about really selecting and developing very fast. So to answer your question, it is speed again. We're actually reducing that sort of, chin scratching, coffee drinking, creative process.
Yeah, which I like.
Yeah, well, I used to love it. I used to enjoy that for about 8 months, now about 2 months.
Yeah.
So again,
wow.
I'm not joking, it's about 2 months. And then we can get, with AI technology, we can take a sketch, AI interprets the sketch, puts it into a 3D shell or a 3D CAD, straight to the engineers. So that synchronicity in the whole chain is really speeding up now.
Yeah. So how do you compete with the ones that are already there in the luxury space? I think on stage last night was the JAC Maestro, which is a big limousine type. I've been out to Chongqing and to Series, and they're M9, and they're going really the higher end of that price point. But a lot of these ones have the Harmony OS from Huawei, right?
Yes, that's right.
Which is really a big selling point. What's your selling point, other than the legacy as being that patriotic brand of China?
Yeah, I mean, okay, we can tell a great story, we can design a great car, but if the content's not there, in China, content needs technology. So, you've seen that car, it's the Maxtra 800, from the Huawei. They as a supplier of technology, of software, they've got a great advantage. You know about Xiaomi as well.
Yeah, of course.
So these guys are coming in, like they predicted about 5 years ago, software companies will dominate.
Yeah.
And curiously enough, they've got the hardware to match. So to answer your question, we have to really watch that. So we can't just sit back and look at the leather, the wood, and the nice trim.
Yeah.
We've got to have the content. In China, it's all about the content. So you've got guys buying Maxtra 800, 35 years old, probably even younger, and they want their iPhones to dock to synchronize, all that stuff. So the technology content for us has to be there. We've got to get a fantastic link into our supply base to get cheap, purchasing deals. If we can't do that, we can't compete on price. And then again, we can't go back to legacy. We have to have legacy as a foundation, but it can't be the reason to buy these days. The reason to buy has to be technology, I think.
It's a crowded space. What's the shakeout going to look like, and when's it going to happen? I talked to Xiaopeng yesterday, XPeng. I've talked to a number of others from Giles. They think the next 5 years is do or die. Do you see that?
Shorter. I'd say about two and a half years. So the startups, they're running on investor money and it's running empty. So give 2 years and somebody says, okay guys, your sales are dreadful, that's a 10 billion loss. So, what's in it for us? Fortunately, with Hongqi FAW, we don't work like that, and we've actually got a very good profit sheet for last year.
Yeah.
But I think, to your question, dog eat dog in this crazy market in China, I really believe that, in the next 2.5 years, there's going to be a real shakedown. And I think it's either investor confidence or it's core product that really is selling well. And at the moment, a lot of companies are running on thin air. Yeah. And it's hanging, you're hanging on there and you're resting on your next product.
Thin air, good analogy for a company that is known as Red Flag, right?
Thank you very much.
Hongqi. So nice to see you. All right, that's Giles Taylor, FAW Group Vice President in charge of design.
Steve, great stuff. We'll come back to you soon, of course, and our thanks to Giles Taylor there. We got more exclusive interviews coming up from the Beijing Auto Show. Chinese EV maker Series is joining a fast-charging joint venture with BMW and Mercedes-Benz. We'll ask their president, John Zhang, about the partnership, what it means for their business. This is Bloomberg.
Welcome back. Wasn't there a scare yesterday of the check-in systems at the Haneda airport?
Oh, yeah.
So anyone traveling, that's one less worry. And here's another advantage, of course, this cheap yen for inbound tourists into the land of the rising exchange rate and the rising sun. Speaking of, we had this conversation yesterday.
Yeah, with the finance minister, Satsuki Katayama, and she says that government officials are in close contact with their U.S. counterparts around the clock over what she calls speculative moves that are keeping the yen weak. Here's more from our exclusive conversation at the Bloomberg New Voices event in Tokyo.
2 years ago, we did intervene in the market, but as after our bilateral meeting with Scott Bessent, Treasury Secretary, we confirmed our bilateral agreement. We did have a very good commitment, and we reaffirmed. And our deputy continuously making contact under this circumstance because the situation of the market is so volatile.
You met him a few days ago. What did he say? Does he want to see anything from Japan, especially when it comes to supporting the currency?
Yeah, everything is secret for between two. But I can just say that we are in a better cooperation. That is very true. Actually, he is coming to Japan before he went to China. He is going to China. He come here.
What does he want to talk about?
We're going to have a talk.
About what?
And our deputies are in close contact day and night, 24 hours, and including any kind of board action.
Using currency swap lines to fund, if needed, intervention?
Yeah, as for intervention, we have free fund, we have free hand, and that is in the agreement of Japan and US. Everybody can imagine everything, but we are strong. We are standing very strong.
In the sense that, can you flush out the speculators if it's not necessarily only about the weakness of the yen and it's also about the dollar strength? But I guess also my question is, how effective can intervention be at this point?
Yeah. That all we can say is the past intervention did have an influence every time. If not, we don't move. And the other thing is, this is the first time for us to see such a volatility deriving from oil market, crude oil market or its future. I think the move is apparently bigger than the case of Russia and Ukraine. Russia is also a big exporter of oil and gas. At that moment, there's a market confusion too, but the move or influence is bigger.
Yeah, intervention's really hot topic that we've had with policymakers. In fact, perhaps the reason why FX vaults completely to the downside, given amidst everything else that's going on. In fact, just on that note, right, it was one of the topics we spoke about with the Philippine Central Bank Governor, among other things we discussed with Eli Remolona. Have a look.
We were not active yet. We may be active later in the day, but for now we're not in the market. We stay vigilant and we'll do as many hikes as necessary. But I think, David, you used the right words. We're being proactive. We're trying to stay ahead of the curve.
Yeah. Dave and I, the amount of alertness we have to be when we interview the BSU governor is insane because of his short answers.
Very short. Which is how it should be.
He breaks news. Like, he tells us things straight. But he even said it's not really about the level that they're targeting. It's not about 60. It's not about 61. You know, in terms of the threshold, it's more about the pace. And I think he mentioned, 50 centavos.
There we go.
I learned that today. Yeah. Centavos is a big move.
Yeah.
But they're not intervening.
Well, not when we spoke to him an hour back. I mean, look at the move in the currency. They could have been. We don't know. Right? Look at the move since that point in time. Anyway, enough speculation. Let's bring in David Savage here, our MLive backer strategist here with us to talk us through the impact of higher prices. Markets seem to be behaving themselves. Oil, though, is still above 100. What's the paradigm we should be looking at oil and equity markets right now?
Yeah, I think, we saw yesterday, we saw some volatile moves in front month crude futures and that kind of, we saw some pretty significant or broad sell-off in Asia, with the exception of the Kospi index.
Yeah.
And that was on pretty heavy trading volumes too. But I think as long as oil prices and is just another factor among many, and it's sort of contained, then I think equities can continue to move higher on this sort of fundamental story of the AI CapEx story and valuations and earnings. But again, it is still a big risk in terms of the conflict.
Yeah.
But ultimately, right now, markets are simply pricing it as one factor among many.
How do you look at the earnings picture? What we saw overnight was Intel with that revenue forecast that really lifted the stock after hours, and I think it's lifting some of the chip space. But how is outside earnings supporting Asian stocks now too?
Yeah, I think at some point we'll see some sort of consolidation in some of the gains we've seen, just because of how far we've seen. At some point, U.S. semiconductor stocks will have a down day. I can probably say that with some level of confidence. But I think, again, the earnings story has been really remarkable here in Asia as well, but it's very concentrated in the tech side, right? And of course, a lot of these benchmarks are very tilted towards tech and hardware. So I think when you look under the hood and look at some of the consumer names, the story hasn't been as positive, and I think that somewhat aligns with some of the more longer-term, medium-term impacts from the conflict.
How many days are
17
days? That's crazy.
Philly Stocks Index. Yeah.
Well, that goes into leverage ETFs. Some of these, let's call it memory names. You have a lot of these single stock, of course, ETFs in Hong Kong. In terms of flows, how does that inform you about everything else that's going on here?
Yeah, I think it's a really exciting place to look. So leveraged ETFs have seen really significant flows year to date. In March, they were seeing really significant flows. So we saw foreign investors really selling Asian equities, but retail really stepping into the void and using increasingly some of these leveraged ETF vehicles. And we were seeing that particularly on some of these single stock leveraged ETFs. And the overall flows are somewhat relative to foreign flows are going to be quite muted, but because of the leverage and timing and the fact that some of these vehicles rebalance daily can have sort of a disproportionate impact on trading volumes. This month, we've actually seen significant outflows from leveraged ETFs in Asia. And I think that points to the fact that retail's been selling and also provides a bit more of a healthy foundation for this rally, right? It's not being driven by speculative leverage flows, at least in this avenue. And it's really foreign buyers that have been coming in, institutional buying as well.
Yeah, taking some of the froth off, right? There's been a ton of momentum in here. David, fantastic. David Savage there, our MLive macro strategist. Speaking of single stocks, this is really what we've been tracking very closely.
Yeah, it's not just the earnings side of things that's really keeping chip makers like TSMC higher here. Take a look at the stock here today. Now, Taiwan came up with some reforms, right? So we're talking about easing the single stock investment cap. So it used to be 10%. Now we're back to 25%.
We're going up to
25%. So certainly this is a move that, you ask some of the local managers in Taiwan, they say, look, this is good news because it's more flexibility to capitalize on this rally, right? That goes into effect today, Dave.
Yeah, after the announcement takes place. And it's really a conundrum, right, on the part of an active manager, because if the stock is half the benchmark, how do you even outperform if you're only allowed 10%? Anyway, there you go. Half of you. This is Bloomberg. Okay, benchmarks on your screens. We're coming up lows in the Hang Seng Tech Index. 10 cents has been in and around these levels. We were slightly low, so we are coming up lows as well on the stock. But yes, we have a 4.8 handle now on 10 cents. Apart from this, volumes on the lighter side of things, and this is generally the mood across markets, equity markets to be more specific, as we glide into this weekend.
Well, the CEO of XPeng says the company's partnership with Volkswagen is deepening with more next-generation models in the pipeline.
Yeah, He Xiaopeng also told us exclusively about plans to open up modular capabilities with partners and also help cut R&D costs.
对，我觉得在这个里面，我们看到的一个现象就是。
I think we've observed a phenomenon here. As a technology and manufacturing company, XPeng's R&D expenses are increasing very rapidly year by year. We're currently doing several interesting things. First, we're modularizing all our hardware and AI. Second, we're opening up our modular capabilities. For example, we're sharing hardware and software with our partners, such as Volkswagen, and we're already in talks with more partners. Third, on April 1st this year, XPeng actually raised the prices of our high-level autonomous driving models. We firmly believe in this, and we'll share some data tomorrow. In early April of this year, the China Passenger Car Association released data showing that passenger car sales in China declined by 26% year on year. I can share some data from XPeng with you. Following the launch of our new generation of autonomous driving technology on March 31st of this year, XPeng's sales increased by over 70% month on month and over 50% year on year.
Well, let's talk about those international partnerships. I do know that you'll be unveiling your second car that you helped engineer with Volkswagen. Volkswagen has a very ambitious goal of unveiling more than 20 new EVs, including in China. Yes. So you're a key partner with Volkswagen. We're also hearing from media in Korea that Hyundai is possibly trying to seek a partnership with you for self-driving as well. So how do you see those partnerships increasing? Volkswagen has 5% stake in XPeng now, 4.9%. Yeah. Do you see that increasing as your partnership expands? Talk about that.
Yes, our cooperation with Volkswagen has been very successful over the past 3 years. Our first collaborative vehicle, the Volkswagen ID Unix 08, has already been launched this month. We are also working with Volkswagen on the next generation of vehicles based on the VEA architecture, which will soon be available for Volkswagen China and other sectors. In fact, the cooperation between XPeng and Volkswagen is deepening further. When we have more information to share, we will provide more details.
That was the XPeng CEO, He Xiaopeng, with, of course, Steve in Beijing there, our Chief North Asia correspondent. Right, speaking of Steve, he's standing by at the Beijing Auto Show with his next guest. Steve.
Yeah, hey, Dave, it's a little hard to hear, obviously. A lot of people crowded around. You should see we're celebrities here right now at the Beijing Auto Show. This is the day one of the press day of the Auto China 2026, and we're very pleased to have with us John Zhang. He is the series group president. They're known for that big Ito brand, which is the M9, your new flagship here behind you. You're the one that are known for having that partnership with the Harmony OS for Huawei, but you're really standing out with your new designs. Tell me about this car. I understand you can actually project color movies from the headlights.
Yes, it is. This is the all-new M9. It's been 2 years since the first version, so we did a lot of upgrades on this model. First of all, the ADS, the autonomous driving system, is absolutely fantastic. We have 6 LiDARs around the car and multiple cameras, and we have the new latest version of software as well. That's for the autonomous driving.
How important is it to refresh your brands more often in China than in legacy markets like Europe and the United States, where it takes years from design to actual showroom? Here you need to get products out quicker because of the hyper-intense competition.
Well, competition is intense. That's just one part of it. However, our customers, we have direct communication with customers. So we keep get fitting of their they have suggestions to which part of upgrades. So we get those information very closely, and we can upgrade according to their needs.
So it's sort of bespoke ordering for these kind of cars?
They actually, we sit down with customers and we write down what they want for the next version. Yeah. And then we put it in.
how do you stay on top? Because last night Huawei had another car with JAC, the Maestro, their latest limousine style. We do see a number of different car makers. We're just over at FAW. They want to modernize the Hongqi, the limousines. How are you going to stay on top? You've been the luxury top dog for 2 years now in a row. Everyone's gunning for you.
They are. However, we invest heavily into R&Ds. Therefore, even you see those equipments on other brands, but they are following. So lots of latest technologies on ITO, on M9 are always the first on car. So like the different projector color, this is the first. And we have the first in 2 years ago it's black and white, and now it's colored. And we have the first on the autonomous driving.
But this is what's important for you to stay on top and differentiate with competitors. You had a refrigerator, I think, announced last year, karaoke system. I think, and I don't mean to make light of it, I think you've applied for a patent and received a patent for an onboard toilet.
Well, that was that was R&D just for the explorations.
Okay.
No.
Yeah, but not necessarily for a high-end limousine.
It's explorations.
So what is the overseas market looking like right now? Last time you and I talked in Chongqing, I believe it was October or November, you told me you do have ambitions to go abroad in the Middle East and elsewhere. But the world has changed a lot. There's a war raging in the Middle East. How has that changed your plans?
Well, from internally, we are on track. Whenever the situation gets better, we're ready to deliver.
How is it complicated supply chains and procuring parts and cost inflation?
Well, it's a changing, continuous changing. So as a company, we're always ready for those unknown changes.
So what percentage, given the external shocks, given your plans, what kind of percentage would you say shall be overseas compared in the next couple of years compared to domestic? You're really a domestic brand right now.
Yes.
But how much is going to be exported by 2 years from now?
Well, if we're talking about a couple of years, I would say 20 to 30% will be overseas market shares.
Where will be your number one market? You're aiming for the Middle East, I think.
We're aiming for Middle East first, then Europe. And as you know, we just signed an agreement with BMW and Mercedes. It's Ionchi.
Yes,
it's
I know.
Charging
infrastructure, right?
In China right now. And that was just beginning. Later on, they have a lot of resources in Europe as well. So that was like one step forward with the later infrastructure corporations as well.
Are you encouraged by Europe? It seems to relax a little bit of some of the protectionist measures. The United States is probably forget it for now, but Europe more optimistic?
Yeah, I think so.
How about Canada?
Well, Canada, we explored chances. We are exploring. Yeah.
Okay, but nothing to announce right now.
Yeah.
So back in November, I believe you had your Hong Kong IPO. You raised about 1.8 billion US dollars. Where are you putting that money? I think you said you're going to be reinvesting into more R&D. So what is the next benchmark that you want to hit now that you have your war chest filled?
Yeah. So most of the raised money will be on R&Ds, and besides, just a couple of days ago, from the brand finance, ITO brand now is the most valuable brand, luxury brand in China, and we are in the top 10 of the world's luxury brands, and we are the only Chinese luxury brand in that top 10. So that's also we build in brands as well.
What's your outlook for the Chinese market? It's been at the lower end faced with extreme pressure on price, and by all indication, the price war continues, albeit at a bit of a slower pace. You told me in November you've not cut 1 penny from your price. Have you changed your outlook?
For this one, we just started pre-orders 2 days ago, and it was like 20,000 yuan more expensive than the previous model. So we add a lot of new things inside, and now this car is even better.
So you have pricing power?
We didn't cut.
Is this a 1 million yuan car?
No, it's
$500,000 car.
Yeah,
but still, you're getting pricing power on that at a time when other car companies are cutting.
But yes, that pricing power comes from the heavily R&D investment. That's how we put a lot of things in the car, like a rear wheel steering, and also the active suspension systems as well.
What are the customers telling you they want to see in the next iteration as you spend that $1.8 billion from the IPO?
Well, they would like to see lots of upgrading and, for example, like a brand value and also the market share. So for 2025, we ranked number 5 in the China market's luxury segment. So we won more position than compared to 2024. In 2024, we were at number 6, and 2025 we were number 5. So we delivered over 400,000 units.
You told me also in November that you're going to go into humanoid robots. Every car maker I've talked to, whether it's XPeng or others, are going into that as well. Where are you on that evolution? When are you going to have?
We're on track. On track. By end of the year, I promise you, next time when you come, we're going to see something. Yes.
Okay, yes. John Zhang, thanks so much for your time on Bloomberg Television. Always great to see you.
Yeah.
Okay, we're off to another hall really quick for another interview. You'll see me in a few minutes if you're watching Bloomberg TV consistently.
All right. Let's see if the paparazzi follow you there too. But yeah.
Or was it for John?
Yeah, the flashes during it was like they were. Yeah, it was almost like they were at a premiere or something. But yeah,
That's like Devil Wears Prada.
Yeah. But think about it, right? The headlight that can project a 100-inch movie. You have in-car karaoke. I mean, that's the party right there. My weekend plans are set. That.
Yeah, and talks of a toilet. Talks of a toilet
yeah, why not?
in-car facilities, right? Who needs a date when you have everything on deck? The only thing you need is a China show, in fact, and project that onto the blank wall. You can use my wall. I don't have anything at home anyway. But yeah, you need to get the car up, though. I guess for those that park their cars in their living rooms, who needs a TV?
Yeah, I think each car maker. I just want to hear more features, right? As they say, the upgrades. I want to know what are they thinking about next to put in those cars. Okay, we have much more coming up in the Beijing Auto Show on Insight with Has. Volkswagen's China CEO Robert Sisek joins us the show to talk about staying competitive in the cutthroat Chinese EV market. We have much more ahead. This is Bloomberg.
All right, the beat that reminds you we are almost at the weekend. Welcome. You're watching the ETF IQ Asia here, of course, on the China Show. So I guess a quick look at markets and how we've done as we almost wrap up this week. In fact, just having a look at some key benchmarks. So this is over the last week. So this includes, of course, Friday last week. So we're down slightly on the global benchmark, Taiwan massively up. There's a separate story there on single stock caps being lifted to 25% from the current 10. But yes, risk is back on plates of investors, at least for the most part. In fact, when you look at inflows, some of the biggest ETFs that have seen the biggest inflows this week coming up on your screens, on price we're up, on inflows, just to give you an idea of the extent to which we have seen that money come in, 1.3 across some. We've also seen the opposite, though, as far as outflows are concerned. The same things are coming up on your screens very, very shortly.
Yeah, I think China was certainly got a bit of that, got caught in this whole sort of outflow story just in the last week or so. So certainly that's one thing to watch as well. But certainly it'd be quite interesting to see, right? When you talk about Bloomberg Intelligence, they've been crunching the numbers and estimating that the global ETF market will reach $50 trillion by 2035. Who's leading that charge and that growth is BlackRock, the largest issuer in the world with about $6 trillion in assets in this class. Let's bring in Nicholas Peach, APAC head of iShares at BlackRock. He joins us here in our Hong Kong studios. Nicholas, it's great to have you. We've been seeing a lot of volatility, whether, the March that we had. I think things have stabilized a little bit in April. But how do you think investors are using ETFs now amidst all this volatility?
Sure. And thank you for the opportunity to be here and to speak to you today. I think what this market environment has really brought to the fore is really, which we've been seeing for a few years now, is really the increased sophistication and breadth of the use cases that ETFs make available to investors. So, ETFs historically have been considered an exposure vehicle, but actually the way people are using ETFs now is far beyond that. So you have precision equity that people are using to take what we call tactical asset allocation views. When the news cycle is moving very quickly, when things change fast, ETFs are a tool that people are using to express those views very quickly and efficiently. You have the growth of fixed income ETFs that people are now using for liquidity sleeve management and cash management, as well as exposure to a vast majority of fixed income instruments that just weren't available previously in that wrapper. You've then got the rise of active ETFs, right, which are typically would be either actively managed fund managers or investors using derivatives overlays, which can be quite complex, right, but instead using the ETF wrapper to express that view as well. And then, of course, finally, you've seen people using the wrapper for novel new exposures like cryptocurrencies, as well as the ability to express views on a commodity. So what you've seen is it's not just a simple exposure vehicle anymore. Really, it's a toolkit to navigate a portfolio in a way that really didn't exist even a few years ago with the Asia client base. So it's been a tremendous evolution, and this market environment has really brought it to the fore.
The cost component of being able to use ETFs to do that, I mean, is that a cost-effective way of doing it? Obviously, if it's not, then they wouldn't be doing it. But I'm just wondering what the demand is like from clients right now to take those costs back down. So
cost efficiency is a huge advantage of the ETF wrapper, because what it gives you is it gives you inherent scale. So if you're an individual investor, and let's take a outcome ETF, as we call it, or an active ETF that has a derivatives overlay to it, right? Okay. If you didn't have the ETF wrapper and you're an investor, investing in a derivatives overlay, whether it's a covered call ETF, which are very popular in Hong Kong recently, whether it's downside protection, that's very difficult to do.
In-house on your own.
In-house on your own.
Okay.
And actually, even if you can do it, it's quite expensive and operationally complicated to do. So what you see is that investors are choosing the ETF wrapper because it gives them that scale. It's all baked into the product. And so from a cost effectiveness basis, it's much more cost efficient than the alternatives that investors were using previously.
And does it differ by region when you break down Asia-Pac? When I look at different country by country?
Right. Not as much as you might think, actually. So one thing that if you look at our global iShares book of business, we have over 1,700 products globally, providing almost every exposure you would need. What you've seen is the business mix of that exposure has moved from maybe 5 years ago, largely broad equity and fixed income, to a hugely broad swath of different products like some of the ones I've just mentioned. But the Asia client base as well has also seen, so here in Asia, in Asia Pacific, we've seen that same evolution of the business mix, which I think shows that the Asian investor community has really caught up in their sophistication of how ETFs are being used. And actually, an anecdote for you, in a few weeks, we're hosting our flagship ETF certification conference in Singapore. We've done it for 13 years. We do a survey of investors.
Right.
The pre-investor survey showed that 70% of the attendees are either extremely familiar with ETFs or very familiar with ETFs. 5 years ago in this conference, we were talking about what is an ETF? Why should you use one in your portfolio? And now, the investor education has just really come up the curve. And that's why you're starting to see use cases. It really doesn't look that different to how it looks in the other regions. So it's been a very accelerated adoption curve here.
Who are you displacing, and what is the anticipated pushback from that corner of the market?
Yeah, it's a great question. I mean, actually, I think the answer differs based on which product you're looking at. In Asia, many individual retail wealth investors, right, have typically used the mutual fund as their sort of wrapper of choice, if you will. Now, I don't know if we're necessarily displacing, because I think there's certainly a place for both. However, what you've started to see is, and actually this is part of our business mix as well. 5 years ago, our book was largely institutional, right? It was institutional investment. And I think there's a narrative out here that ETFs are an institutional product. But actually, if you look at our business mix now, it's almost exactly 50-50. And so what's happening is individual investors and wealth investors are using ETFs where previously they were using different vehicles. But if you look at a fixed income ETF, right, particularly like a short duration fixed income ETF, and we've seen a huge amount of growth there, before the advent of the fixed income ETF, people were keeping those positions in cash, right? Literally just cash, right? And they were giving up that yield and they had real cash drag in their portfolios because you would see, when someone was changing their exposures, they'd move from equity to cash. Well, now what happens is people move from equity to a short duration fixed income ETF where we've seen a huge amount of growth. And that's why. So what's happened is it's not necessarily always displacing another investment product. Sometimes it's actually just creating a new vehicle that didn't exist. And just to round out the question, I think some of these outcome products that I've spoken about with derivatives overlays, large investors were going directly to banks if they could to execute those on their own, right, via derivatives contracts or swaps. But those were frankly unavailable to mid-size or smaller investors because they just didn't have a vehicle to express it. So it's not necessarily just a displacement story. Actually, some of these are brand new avenues of investment that just didn't exist previously.
Okay. Blue ocean, I think, is the term for that. Nicholas, that's all we have time for. Thank you so much.
Oh, thank you.
There was lots more to talk about, but yes, I think we're out of time. We can do that next time. Nicholas Peach there, guys, APAC head of iShares at BlackRock. You can tune in, by the way, ETF IQ Asia every Friday on the China Show. We'll be bringing you more analysis and conversations with the top players in the markets, also newsmakers. Lots more ahead. This is Bloomberg. All right, let's have a look at TSMC. We're coming off highs a little bit, still up substantially. Might be down to these new rules being eased in terms of single stock limits that active managers now perhaps have the liberty to play around with.
Yeah, from 10 to 25, go at it, right? Does this really help you, continue to ride this wave that we're seeing in Taiwan when it comes to AI and really the whole AI full stack? So certainly one thing, and then analysts are saying this could be a really good opportunity to really benefiting furthermore the TSMC surge, apart from, and a lot of the other large caps too, right? They talk about media tech and some of these other companies that might benefit from these reforms.
Yeah, might see more inflows. As far as that's concerned. All right, look at markets. So apart from this, if TSMC does this, the benchmark likely does. Okay, not as good. Okay, because you have, of course, the counterweight of the likes of like Tencent, for example, and Alibaba, and some of the big ones, of course, moving to the downside. Were it not for TSMC, this would be much, much lower. That's it from us here on the China Show. Insight with Haslinda Amen is coming up next. Happy Friday. We'll see you all on Monday.